Tim McMillan with Canadian Association of Petroleum Producers. You have slides as well, Tim?
I do.
Okay. Imagine they're loaded up shortly.
Great. Well, let me start off by saying thank you for the opportunity to be part of this discussion today. As my slides come on, I represent the upstream oil and gas producers in Canada. We don't represent pipelines, we don't represent LNG facilities or refineries, but the companies that are producing the energy and how we're doing it. So I guess what I want to talk about today is a couple of things. One, the opportunity Canada has, and I think an important opportunity for Canada to be more integrated and more linked with Europe. The second, a quick snapshot of where we are today, which is challenging times economically for the oil and gas industry as prices have dropped with a surge in global supply. But the third thing, and I think the most important thing, is where do we go from here? What are some of the solutions to the big problems we're facing? And I think that our last panel talked about we have some toe-curling ambitious objectives that we need to meet. And now is a time to be finding solutions, and our industry is committed to finding those solutions, finding partners, and working towards ways in which we can be more efficient, more effective, where we can utilize energy and remove the carbon. And I think technology is going to be a very important part of that. Partnering with other industries, partnering with nations around the world is the path forward. So I'll start off with a quick snapshot of Canada. Canada is a global leader in energy production. We're the 6th largest producer of oil. We are the 5th largest exporter of natural gas. On the oil side, we have the world's 3rd largest resources after Saudi Arabia and Venezuela. On the gas, we have about 300 years supply. If technology didn't advance 1 inch, we have 300 years of potential in front of us today. On the current economics of our industry, in the last 2 years, global supply has surged, and it has suppressed the market from about a $90 barrel on oil down to as low as 26, now up into the mid-40s. What that has done in Canada has really had us pull back on our capital expenditure. That's happening globally. We've seen offshore capital expenditure pull back, the shales in the US pull back, and in Canada, in the Middle East has pulled back, everywhere has. For us, it's been about 62%, from 81 billion down to 31 billion. At 31 billion, the oil and gas industry is still the biggest investor in the Canadian economy, and substantially bigger than the next biggest, and will continue to. Even with those lower levels of capital investment, we added about 200,000 barrels a day of production last year from our oil sands. And the oil sands are big multi-year projects, which investments today start producing energy 3 to 5 years out. So the pipeline is pretty consistent. We know what it looks like out over the next 5 years and have a pretty good idea out to 2030. We've seen certainly job losses. We've seen on the national level deficit budgets in many of the provinces in which we operate. The federal government is in deficit. We've had our biggest trading deficit in Canadian history in the last few months, all based on the price of the commodities, not on the volume which are moving. I think we have some real reasons to be optimistic in Canada for our energy sector. One, we are a technology-driven energy sector. The way we produce oil and natural gas in Canada is world-leading. It's to the oil industry of the 1980s, it would seem like science fiction, the ways and the technologies which are currently being used. We have a mature workforce. We have world-class resources, and this articulates the International Energy Agency's demand outlook into the future. And I think that this, for me, frames up the challenge that we're facing and some of the challenge that was articulated in the last panel, that the global demand is increasing. And it's not increasing a little bit, it's increasing dramatically. Europe and North America, our demand isn't increasing. In fact, before the prices dropped, we had seen close to a flatlining and a decrease of demand for oil and natural gas. But that's not the case in India and China. India and China are expected to make up 60% of global increased demand into the future. And you can also see that coal makes up an increasing portion, or not an increasing percentage, but an increasing amount of coal will be used into the future, according to the International Energy Agency. These are realities that I don't think we should shy away from. I think we need to be clear about them and have a plan on how we move forward and how we can move forward and meet our objectives in regards to the climate. Snapping back to the Canadian perspective, most of the growth we've seen in the last few years has come from our oil sands. And as we look backwards, we added about 1 million barrels a day in the last decade. And we plan to add about 1.5 million barrels in the next 15 years. We know, as I said earlier, what the investment intentions are out for the next 5 years because those projects are under construction. We have a pretty good idea of what will be moving through that pipeline out to 2030. And 1.5 million barrels a day, it's substantial and important to Canada. In a global context where we're at about 94 million barrels a day of consumption, adding another 1.5 is not huge in that global context, but it certainly is important here in Canada. There's a lot of discussion in Canada about pipelines today, and where we are today is we are at full capacity. There's what we call apportionment on our current pipeline system, meaning there's more oil being produced than there is pipeline capacity, so it's going out on rail, which is less efficient, has more greenhouse gases, and higher costs. And where this red line is the growth profile for our industry, and we in the next months will make some big decisions about our takeaway capacity into the future. And ultimately, all the pipelines we see stacked up on this chart are going north-south, feeding our American friends and American customers. Growth in the world is going to be east and west to India and China. And I think what's important for the room here is as we look at the energy mix and where Europe is getting its energy from, the potential of having Canadian oil and Canadian natural gas is a link that I would like to make far stronger. And I'm going to make the case for why I think Europe should be looking to Canada as a supplier of choice. On the natural gas side, there's two scenarios. One is, the top one is a status quo model, where we continually are seeing a decline. Today in Canada, Canadian gas is getting pushed out of some of our historic markets. Here in Ontario today, 2/3 of the gas that will be used comes from the US. Looking into the future, there's a couple pipelines that may push it out almost completely. And as we're looking at climate challenges, gas being produced in Canada today is paying a carbon tax, a substantial carbon tax. And it's competing with gas coming out of the Marcellus Shale in the US, which has no carbon price on it. And we have methane regulations, venting and flaring regulations, which are world leading. If we can't find a balance where those costs aren't equalized, we're going to lose market share to products that don't have the same environmental standards that we do. The bottom chart shows an LNG export capacity from Canada, an increased vehicle fleet using natural gas, and as nuclear is phased out, natural gas taking up a larger portion of the electrical fleet. So to put this in relevant terms, I think for the Europe conversation, I grabbed this off the European Union's website. It's a little bit dated, it only goes out to 2012, but the trends are pretty consistent. Europe has increasingly been importing more of their energy, substantially more of their petroleum products, oil and natural gas. And this goes up to 2012. And where you're getting these products from are in a big way, Russia, Saudi Arabia, Libya, Nigeria, Norway, and Kazakhstan on the crude oil side. And my pitch is going to be, and I'll articulate this a little more in a little bit, is who in that list is solving climate issues? Who's investing in technologies to lower greenhouse gas emissions per barrel? Who is looking to enable renewables on the electrical grid? On the natural gas side, the list is somewhat the same, but Norway takes a larger chunk. Norway has passed the peak of their production in oil and natural gas and is making up a smaller contribution into the future. So I think from a European perspective, I would like Europeans to look at Canada as a supplier of choice. Who is making the investments in technology? Who is advancing policies that are driving innovation. And I'm going to give you a couple quick examples. This here is the Canadian COSIA, Canadian Oil Sands Innovation Alliance. On the oil side, our 13 largest oil sands producers a few years ago got together and said, you know, we're all investing in technology to do things better. But maybe when it comes to the environment, we shouldn't be competing with each other. We can't afford to. We have to move quicker. Let's have a partnership where we can share intellectual property. And to this day, they've invested $1.3 billion. They've shared 800 technologies. They've shared technologies that worked. They've shared technologies that don't work, so people don't waste their resources going down the wrong path. And since 1990, we've been able to lower greenhouse gas emissions by about 30%. I think there's substantial opportunity to continue to lower that. The newest oil sands plants today can produce oil at the same greenhouse gas emissions per barrel than the average barrel in North America. And as we're looking into using solvents and other technologies, I think we can do even better. Here's another piece, an interesting piece COSIA is doing. They're partnering with the XPrize, finding new and innovative ways to take carbon out of the energy stream and use it in a positive way. And it's a $10 million prize going down 2 paths, and we have a substantial amount of interest. I think that there's no monopoly on good ideas, and finding new ways, both inside companies and outside, are going to get us where we need to go. Ultimately, for us today, one of our biggest challenges is market access. If Europe today wanted Canadian natural gas because they thought it was superior to Russian natural gas or Azerbaijani natural gas, we couldn't get it to you. We need LNG facilities. If you wanted Canadian oil because you thought that the carbon policies in Canada were driving innovation and were superior to Azerbaijan or Venezuela or Nigeria, we couldn't get it to you because we don't have a pipeline. So these are the internal challenges we're facing. We're taking them head on, but it's not easy. And I think that a partnership and a push from Europe saying, Canada, we need you guys to be leaders in this regard would certainly be very helpful for us domestically. I'll conclude my comments there, but thank you very much.
Thank you. Thank you very much, Tim.